Hello and welcome. You are watching Business Today Television. I'm Sakshi, Batra, and on this special edition, we are going to be doing some tax talk. Can you save taxes on your income by transferring a part of your income into your wife's account? Well, that is the most frequently asked questions to us. So we thought, why not we break it down with all the facts for all of you, clarify all the doubts, and really tell you what is possible and what is not possible. To help us with this, I'm now joined by a very special guest. Gauri Chadha now joins in, and she's a very well-known tax expert, and you've heard her many times on Business Today TV as well. Welcome, Gauri, and thank you so much for taking the time out. It's a great pleasure to have you with us.
Thank you for having us, actually. Thank you.
Well, Gauri, I'm sure that all of your clients also must have been coming to you with all the queries of what is the best possible way to save taxes. Now, we've been discussing all the sections that are in the Income Tax Act to really help all our viewers also to understand the best ways possible. But this question really has come up, pretty frequently as well, that whether the money transferred to a wife's account or spouse account can also be helpful in saving taxes or not. So first out, give us clarity on that. Is it really possible if I apart some of my money or some of my income and transfer to my spouse's account, is it possible to save taxes on that?
Sakshi, see, the thing is that, of course, there are several ways by which you can save tax. But,
Yeah.
people usually think that, the husband can transfer something to wife's account, especially if wife is not earning and, they can file her income tax return, claim the basic exemption limit, ATC, APD, and, all the benefits, and they can save tax. But this is not true because Income Tax Act clearly says that when the husband transfers something to wife or wife transfers something to husband, the provisions of clubbing come in place. And the provision of clubbing clearly says that if the husband is transferring money to wife's account and the wife is investing that money somewhere, say FD, mutual funds, or anything, the interest or capital gain or whatever she is earning out of that money will be clubbed in husband's income. So eventually the husband
Okay.
will have to pay tax on that. So yeah, in nutshell, you can't save tax by transferring something, any asset or maybe any income to wife's account or husband's account.
Okay, but there's also another doubt that, when we say that, money given in the form of a gift or cash given in form of a gift can also save you some taxes as well. So, how does that really work if somebody really parts some money in form of cash to a husband or a wife?
See, of course, if you give a gift to anybody, so if we are talking about the gifts given to relatives as per the Income Tax Act, it is totally exempt. So if you give the gift to your parents, your brother, sister, or there's a huge list in Income Tax Act that is totally exempt. But there are several exemptions. Exemptions are when you gift your husband or wife, basically spouse. In that case, it is not included in gift. Of course, that is a gift.
Okay.
Wife is not liable to pay any tax on the principal amount. But whatever income she is gaining out of investing that money, that income is chargeable to tax under the spouse's account. So that is the cash here. Otherwise, of course, gift is exempt. We can receive a gift up to rupees 50,000 thousand in a year, which is non-taxable. Plus, we can receive any amount of money from relatives as per Income Tax Act, which will not be taxable. But exceptions are always there. So this is one
Sure.
exception.
Sure. So, you're talking about that, money which is transferred to a wife's account, and if the wife really invests that money in some form or the other, any earning of the interest has to be taxable, and that is by liability that, the husband will have to pay. But what if this is a form of a pin money, say something that the wife uses just for spending on, say, in essentials, then what happens?
See, basically, what happens is like if suppose the wife is not earning, or maybe it's mutual understanding. If husband is giving says some amount of money to his wife for daily expenses, monthly expenses, and somehow she's saving some money out of that. Suppose husband is giving 1 lakh rupees per month, and she's saving 10,000 out of that, and this is her saving. So for this money there is no clubbing provision which will be applicable. So this money she can invest in her name, she can show the interest in her return, and but the logic is, it should be logically, it should be pin money only. You can't say
Yeah.
that she is getting 5 lakh rupees per month as pin money and she is saving 4 lakh 50,000 out of that. So it should be logical also. So if you can prove that it's a pin money and you are saving, this is your saving, then it's not an issue.
Okay. What if the money given to wife is in a form of a loan? What if a husband, really loans some money to the wife? Can the husband save taxes on that?
See, now, this is a very tricky question because once you give a loan to somebody, you should actually charge interest. Of
Yeah.
course, you can charge a nominal rate of interest, but you have to charge. And if you are giving interest-free loan, then it's a question that why have you given an interest-free loan to wife? And if wife is investing that money into her business or something, and then she is making money out of that, then again, that will be clubbed in husband's income. So it's a
Hmm.
tricky question. It's up to you how you can prove that, genuinely it was a loan. So maybe you can charge some rate of interest and, pay tax on that interest component, and you have to work out that ways. But of course, it's a very tricky and challenging position to be in.
Okay. Say, so for example, a husband and wife together open a joint account. Then what happens? Who really pays the taxes there?
See, if it's a joint account, of course, there will be one primary holder. So,
Hmm.
logically, the primary holder is supposed to pay the tax on the income or the interest or whatever you are earning on that account. But now the thing is, suppose the wife is not earning at all and they still have a joint account and wife is the primary holder, but the
Hmm.
whole deposit is made by the husband, then logically and as per few judgments also, the husband is liable to pay tax on the interest component, although the primary holder is a wife and wife's
Okay.
PAN card is registered in the bank and the bank is deducting TDS wife's PAN number. So while
Sure.
filing a return, you will basically transfer that TDS to your name and you will claim that TDS and you will pay interest tax on that interest. So,
Hmm.
but usually what people do is they see who's the primary holder and they pay tax accordingly. But this is not, as per law. As per law, the person who is actually contributing to that account should be paying tax.
Okay. So, what is really better when you want to save taxes in your wife's name? What is better? Should you just give cash? Should you transfer money in the form of an account? Should you give or maybe invest in FDs or mutual funds or some other form? What is the best way then?
See, cash is one thing which we don't appreciate ever in any case. We should never have a cash transaction. It should always be online, and no matter you are receiving anything or giving anything, it should be online. Now, if you are transferring online to the bank account, so of course, the interest component will be clubbed in your income. If you are investing some money in wife's name, like in mutual funds or FDs, in that case also the capital gain, dividend, interest, everything will be clubbed in your name. So
Hmm.
in every case where husband and wife are being taxed, so the clubbing provisions will be there. So there is no as such way of transferring to the wife or husband and saving tax, apart from when you are actually giving her a property or a gift and you are paying getting consideration for that, which is of course, then if you are getting consideration, then it's not a gift, so it becomes illogical. But if there is consideration, then it's fine. If there is no consideration, of course clubbing will be there.
Okay. What about buying some asset in your wife's name? Maybe buying a home, a flat, or a car. What if that is done in a wife's name? Can the primary holder or maybe husband, can they save taxes there?
Yeah. So Sakshi, if you see, it's a like a very normal transaction these days, where if husband is buying a home and he's making the wife as co-owner of that house to for future references, like if in future something happens to him, then it can easily be transferred to wife's name, and for the betterment of the family. So now the thing is, in this case, husband will be the deemed donor, because actually the husband is paying the whole amount for that home, and the
Yeah.
wife is, if she's earning and if she's contributing, then of course she can claim that benefit for
Hmm.
principal, interest, and everything, and rental income also she can basically include in her income. and pay tax on that. It can be split. But if wife is not earning or she is not contributing to anything, then she cannot claim that benefit, and she cannot claim that rental income in her return also. So
Okay.
basically, in this case, the husband will be deemed owner. But if husband and wife both are earning, both are contributing, both are co-owners, co-borrowers, and then they can basically claim the benefit of deductions also, and they can show the income also in their return.
Okay, so now we're shifting towards, both the members or both the spouses really earning. We've so far discussed largely about, how can you really save taxes, or is there any possibility if your non-earning spouse, you really transfer some money in any form or invest in any form, how can you save taxes there? But now towards when both the earning members are there. So, there is one component in our salaries, and that is LTA. How would you really look at this form? Can this form be really used to save taxes if both of the spouses are earning members, if both of them take LTA deductions, the higher deductions, there is no limit as well. So on one part you can take vacations, you can enjoy yourselves, at the same time you can save taxes. Is that a possibility?
Yeah, of course, of course. That is if both of them are earning, both of them are getting LTA benefits. Of course, they can use the LTA benefits because LTA benefits are usually for self, spouse, and two children. So, of course, if you are getting, two vacations in a block of 4 years, then in totality, if you see it as a whole, so you will get 4 vacations. So one vacation every year. So, of course, yeah, you can save tax and enjoy at the same time.
That's wonderful. What about medical insurance as well? Is that a way how both the earning members can save taxes?
Well, yes, actually, that needs financial planning because medical insurance comes under 80D. So,
Yeah,
I think our viewers would be knowing that 80D is a section where you can claim 25,000 for self, spouse, and children, and separate 25,000 for parents. And if you are senior citizen, then 50,000, or if parents are senior
sure.
citizen, then 50,000. So you have to see if you are claiming 25,000 in your name for your own medical insurance, and your wife is paying her own medical insurance, then maybe you can claim 50,000 separately. And if you're
Okay,
taking a joint medical policy and you're paying 50,000, then it's illogical because you will just get the benefit of 25,000 in your return. So
that's
that
true.
needs planning, or maybe the wife can pay for the parents' insurance, or you can pay for the parents' insurance, and she can pay for self and spouse, or maybe the wife can pay for her parents' insurance. So that is how it is. It will depend on the
Sure.
case to case. It will differ. You need planning for that.
Okay. What about education of children? Because that is also a major expense that both the spouses end up incurring into. Is that a way? Is there a way that they can save taxes for each other?
Again, yes, the same rule will apply if you have, so say, two children. One can pay for the one child, the other can pay for the other child, and you can basically split the expenses, because when you pay for education expenses, if you talk about Section 80E, which is the interest on loan which you have taken for the higher education, in that case you get the whole benefit of the interest on education loan. So even if the higher tax slab person is claiming it, it will be beneficial. But if both of them want a deduction, they can definitely split that and claim.
All right. Well, we've discussed several of the topics over here, not and all clubbed into one. One thing is very clear: in case you really want to save taxes, you should definitely take your spouse's consensus right there, because you together you can actually end up saving more taxes. So that is the end line, really. Whether you're a husband or a wife, whether your husband or a wife is non-earning member or an earning member, there are several ways of saving taxes. Many topics covered here by Gauri, and we can continue to revisit these topics each one by one, so that you can also do better financial planning for yourselves as well. Well, many thanks, Gauri, for being with us on the show and discussing and sharing all these wonderful insights. Always a pleasure having you with us on BTTV.
Most welcome. Thank you so much.
All right, and we'll wrap it up at that, but do stay tuned on to BTTV as a whole lot of action from the world of business and stock markets continues on the other side.
If you like the video, do like, comment, share and subscribe.